Fed cut rates. Decoding the Federal Reserve. Segment 1. Introduction. 1. Start by introducing the topic. The Federal Reserve's pause in its rate hiking campaign has brought attention to the future trajectory of interest rates. 1. In today's video, we'll explore the Fed's recent actions and forecasts, and discuss the implications for the economy and financial markets. Segment 2. Fed's rate hike history. 1. Explain the timeline of the Fed's rate hikes. Since March 2022, the Fed has raised its benchmark interest rate at 10 consecutive meetings, totaling a 5 percentage point increase. 1. This rapid series of rate hikes is the most significant in the past 4 decades. Segment 3. Purpose of rate hikes. 1. Discuss the reasons behind the Fed's interest rate increases. The Fed raises interest rates to make borrowing more expensive, aiming to slow down spending and mitigate upward pressure on consumer prices. Segment 4. Current Fed interest rate. 1. Provide the current Fed funds rate and the recent decision to keep it unchanged. Currently, the Fed funds rate stands at 5% to 5.25% after the Fed decided to maintain it during its latest meeting. 1. This decision allows policymakers to assess the impact of their previous rate hikes on the economy. Segment 5. Fed's outlook on inflation. 1. Highlight the Fed's concern regarding inflation. While overall inflation has been trending downward, a key measure that the Fed closely monitors, core personal consumption expenditure, PCE, prices, has remained stubbornly high. 1. The Fed believes that further rate hikes are necessary since inflation has only moderately responded to previous increases. Segment 6. Market expectations. 1. Discuss market expectations for future interest rate changes. Financial markets anticipate another rate hike in July but remain skeptical about the Fed's prediction of an additional increase this year. 1. Market participants project a slowdown in the economy and inflation, which could keep the Fed on hold. Segment 7. Timing of rate cuts. 1. Explore the timeline for potential rate cuts. Although the Fed has not forecasted any rate cuts for 2023, some market participants had expected rate reductions as the economy faced a possible recession. 1. However, continued consumer spending and resilience in the job market have led to a shift in market projections, pushing the anticipated first rate cut to January. Segment 8. Benefits of rate cuts. 1. Explain the positive effects of rate cuts. Lower interest rates have a ripple effect on the economy, reducing rates for mortgages, loans, and credit lines. 1. Additionally, they make equities more attractive compared to bonds, potentially boosting the stock market. Segment 9. Conclusion and summary. 1. Summarize the key points discussed. In conclusion, the Federal Reserve's decision to pause its rate hiking campaign while forecasting further rate increases has raised questions about the timing of future rate cuts. 1. Market expectations and economic indicators will play a crucial role in shaping the Fed's future actions. Segment 10. Impact on borrowing costs. 1. Discuss the implications of the Fed's rate hikes on borrowing costs. The series of rate increases by the Federal Reserve has led to higher borrowing costs for consumers and businesses. 1. Mortgage rates, home equity lines of credit, and other loans have seen an uptick, with 30-year fixed mortgage rates averaging around 6.7% compared to 3.7% in February 2022. Segment 11. Investor behavior. 1. Explore how rate hikes influence investor behavior. Higher interest rates make bonds less attractive, prompting investors to shift their investments towards equities. 1. This shift can potentially bolster the stock market as investors seek higher returns in a rising rate environment. Segment 12. Economic growth and job market. 1. Discuss the impact of the Fed's actions on economic growth and the job market. The Federal Reserve's rate hikes are aimed at controlling inflation, but they can also have consequences for economic growth and job creation. 1. By making borrowing more expensive, the Fed seeks to balance economic expansion with stable prices. Segment 13. Evaluating the Fed's forecasts. 1. Analyze the accuracy of the Fed's forecasts. The Federal Reserve's projections on interest rate increases and future economic conditions are based on various factors and economic indicators. 1. However, it's important to acknowledge that these forecasts can evolve based on new data and developments in the economy. Segment 14. Market Volatility. 1. Discuss the potential impact of the Fed's actions on market volatility. The Federal Reserve's decisions and comments can contribute to market volatility. 1. Investors closely watch the central bank statements and adjust their strategies accordingly, which can lead to fluctuations in asset prices. Segment 15. Global Economic Context. 1. Consider the global economic context in relation to the Federal Reserve's actions. Segment 16. Financial Market Reactions. 1. Explore the reactions of financial markets to the Fed's decisions. Segment 17. Monitoring inflation and economic data. 1. Emphasize the importance of monitoring inflation and economic data for insights into the future path of interest rates. Segment 18. Impact on business investment. 1. Discuss the potential effects of the Fed's rate hikes on business investment. Segment 19. Consumer spending and affordability. 1. Explore how the Federal Reserve's actions can affect consumer spending and affordability. Segment 20. Housing market considerations. 1. Discuss the impact of rising interest rates on the housing market. Segment 21. Monetary policy divergence. 1. Highlight the divergence in monetary policies between the Federal Reserve and other central banks. Segment 22. Unintended consequences. 1. Discuss the possibility of unintended consequences resulting from the Fed's rate hikes. Segment 23. Economic indicators to watch. 1. Identify key economic indicators that can provide insights into the Fed's future actions. Segment 24. Financial planning and decision-making. 1. Discuss the importance of financial planning and making informed decisions in response to the Federal Reserve's actions. Segment 25. Long-term outlook and flexibility. 1. Emphasize the significance of taking a long-term perspective and maintaining flexibility in response to the evolving economic landscape. Segment 26. Conclusion and final thoughts. 1. Wrap up the video by summarizing the key points discussed and encouraging viewers to stay informed about the Federal Reserve's actions and their impact on the broader economy and personal finances.